And big news coming in now from the war in West Asia. It seems that the Iranian state-owned television, Press TV, is claiming that there has been massive destruction that has occurred after the US-Israeli strike on a stadium in Tehran. We are bringing you the visuals right now that you can see on your screens. The claim is that an Iranian stadium was targeted and reduced to rubble in a strike by a US-Israel-led coalition. So it seems there has been massive destruction at this Tehran stadium, and these are the visuals that have been floated in support of that. Israel strike has demolished Tehran's stadium. So this is in fact a war, an information war also, in terms of visuals that are being given out by both sides to show the attacks. And this visual particularly because Iran Press TV is trying to show how civilian targets are also being put into, are also being targeted as far as US and Israel are concerned, not just military targets, not just regime targets. So a stadium that has been attacked according to the Press TV, which is the Iranian state-owned 24-hour English and French language news channel, and it is saying that this particular stadium has been attacked. It is a civilian asset. It has nothing to do with the regime or the military or the Iranian forces, and they are trying to show that it is sort of a playbook of US and Israel to attack the civilians as well. They had earlier also released footage of residential areas that they claimed had been targeted. There was actually footage that had come out where they had shown how a missile was stuck inside a wall in a residential area in a house. So clearly Iran is trying to build a narrative that it's not just the military and the regime that has been targeted by Israel and US, but civilians as well. One of the strongest arguments they had put out regarding that was of a school, a girls' school being targeted by in the first wave of strike, and now this visual of a stadium being targeted in Tehran. And amidst all this, it seems Iran is not ready to negotiate, and even US has said that that time is past, it's too late. Now, Iran envoy to India has said that there will be no negotiation with Israel. As of now, no, is what in India, Iran's ambassador has said. He has said, on being asked if Iran is ready for these negotiations with US and Israel, he said no. Absolutely not. And on the Strait of Hormuz, he has said that we have no news, we have no formation in this case, but they said that they want to make it clear that Iran has demonstrated sincerity while US and Israel have shown open hostility.
Is Iran ready for any kind of negotiations with US?
Up to now, no. Because we were in the negotiation table. They destroyed the negotiation table. They started the war. You know that at the first time, the elementary school targeted to the aggression. They killed 160 girl students. This is terrible. This is terrible.
The IDF has released footage showing the downing of an Iranian YK-130 over Tehran yesterday by an Israeli Air Force F-35I fighter jet, and these are the visuals of that engagement. And now we bring you more visuals of this war. A second Iranian warship is heading towards Sri Lanka's territorial waters on Thursday, a day after a US submarine destroyed an Iranian frigate. A Sri Lankan minister told Parliament that Iran's Iris Dena sank off the Lankan coast. Sri Lankan authorities say 80 people were killed in the submarine strike. Azerbaijan, another US ally, has come under fire from Iran. Azerbaijan's foreign ministry says an Iranian drone struck the airport in Nakhchivan. injuring 2 people. Baku has summoned Iran's ambassador over the incident. Now, Iranian state television has aired a message from an Ayatollah calling for the shedding of blood. And now let's go across to Sakshi Badra of Business Today, who joins us with all the updates of the markets. Sakshi, over to you.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight. SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange.
Hello and welcome. You're watching the Business Today show on India Today. I'm Sakshi Batra, the 3 p.m. show where we get you all the closing action on the Lal Street. But first up, let's take a look at the top headlines this hour. Markets rebound on positive global cues from Wall Street. The Sensex now rises 300 points to near 80,000 now, while the Nifty is also moved above 24,800 odd mark. Look at the buying in the metal space, the pharma, the realty stocks as hopes of easing tensions in the Iran-Israel-US conflict has lifted the investor sentiment yet again. Amid continuing Middle East tensions, 2 Russian oil cargoes earlier bound for East Asia have switched course to India now. Ship tracking data shows tankers carrying about 1.4 million barrels of Urals crude is now set to discharge at Indian ports this week. This is as per the Bloomberg report. The auto retail sales have seen a strong year-on-year growth in February. According to FADA, total vehicle retail sales have seen a 26% jump to 24 lakh units. The industry body has said February has turned out to be the best ever month for overall retail. Also, dealers expect demand to remain strong, supported by festivals and the financial year-end buying. China asked top refiners to suspend diesel and gasoline exports, a move that could now tighten global fuel supplies. Stocks like Reliance Industries, MRPL and also Chennai Petroleum are in focus amid the possible shifts in refining margins. Defense stocks are in focus after reports indicate that the Indian Navy is close to finalizing 99,000 crore rupees deal for 6 German submarines from ThyssenKrupp Marine Systems. The submarines will be built in Mumbai by Mazagon Dock Shipbuilders Limited, with the stock now jumping nearly 10% on the news. Well, all right. right, straight on to the stock markets right now. There's been wild swings in the markets right now, and you can actually see the markets at the high point of the day. You can clearly see the Nifty hovering at 24,828 at this point in time. There's a 1.5% kind of a spike that you're looking at, 1.3% spike on the Nifty at this point in time. Well, most of the sectors are actually contributing. You're also seeing the broader market support the indices. The Nifty Bank also up by 0.8% at this point in time. You can also look at the Nifty Mid-Cap 100 Index up by 1.7%, outperforming the Nifty and the Nifty Bank as well. So it's the broader markets that where the action is shifting right now. Among the other major indices, you can clearly find autos up by over 2%, financial services 1% higher in trade. Also, FMCG stocks are up by about 0.5%. I think barring IT stocks that are down by still 0.4%, most of the other sectors are doing pretty well. The metals are shining bright, 2.25% higher. Pharma stocks 1.5% up in trade. You can also look at the real estate stocks, 1.8% higher. Consumer durables, don't lose sight of that, 2.3% higher in trade. Most of the sectors are actually up by 1% or more in trade. It's just the IT stocks that are dragging a tad bit at this point in time. When we actually look at the clear stocks that are in focus on the Nifty as well, you will be able to clearly find out a lot of defense related names that are hovering higher in trade. And of course, apart from that, autos and the real estate names that are also up. Adani Group stocks are in focus. Adani Ports is up by 4.7%. Reliance Industries is about 3.5% higher. Remember, these are the heavyweight sectors and the stocks that are hovering higher as well. L&T recovering from the initial losses that we've been seeing. That stock is also up in trade now. Power Grid, JSW Steel, Shriram Finance. These are all the names that are hovering higher in trade, supporting the momentum as far as the Nifty stocks are concerned. But let me quickly go across to our guest now. Sharmila Joshi, market expert, is now joining in to share with us a fresh view on the markets. Hi Sharmila, always a pleasure to have you with us. Well, first up, help me understand what are you making of this extreme amount of volatility that we are seeing in the markets? What has really led to a spurt after 2:20 p.m. today?
Yes, that last part is a little difficult to explain. But I think before that, what we clearly saw was the fact that in that sense, market wisdom is complete. And if you are looking at a war, then the market is going to price in the worst case scenario first before it starts recovering, which is precisely what we saw. And the kind of bounce back that we were seeing in the first half of the day seemed to sort of reflect that market had decided that so much correction was enough, and now we should sort of go back to a more normal sort of a market reaction. But yes, I think post 220, the kind of jump that we've seen, that is a little difficult to explain. Having said that, I think somewhere, we have also sensed in this last year or so, like even as we speak, Ukraine war is almost 4 years old. And markets do have this tendency to sort of go back to normal because, you are largely unaffected by, though nobody really in the world today is unaffected by what happens elsewhere. But yes, to a greater extent, we are not in the immediate line of fire. So you take sort of solace from that and you move on with the things that are within your control, and markets move on from there. So I think that is what has been the trend that we have seen these last, whatever war sort of situations that we've had played out in the last couple of years. And this is what we are seeing again. Having said that, it's not the best place to be in, and one hopes that things sort of quieten down in the Middle East soon. You don't want this to linger on. But for now, the markets seem to have decided that so much correction is enough.
Well, of course, nobody wants this war to linger on, but, the kind of statements that we are getting from US President Donald Trump indicating that this could go on for well about 100 days or so, that would also keep a lot of investors, on the edge at this point in time, how to maneuver this uncertainty. What are you guiding clients at this point in time, Sharmila? And give us a sense of, are you telling them to tweak their portfolios to have a peace of mind and probably protect themselves from the everyday volatility that we are going to be seeing in the markets with, changing statements, changing, developing scenarios every day?
Well, if you are making money on something that, which is again sort of difficult to see in this market, then yes, definitely you should book profit. I think maybe if you were to see a situation where we were to see a run on silver again, maybe you could see some amount of profit booking there. But by and large, I think, I'm looking at this market as an opportunity to buy because very honestly, equities haven't done much over the last year or so. So there are very large pockets which look attractive. It's just that, my comfort is not there, because of everything that you outlined, because you don't know how long this is going to go on, whether things are going to get worse. So in that sense, I'm circumspect. I'm not saying that you should, sort of jump in and buy everything at this price, because you will see these prices for some time, to my mind, because you will see recoveries and drawdowns. When you get a spurt of bad news again, maybe markets would correct a little more. So it's a situation you have to monitor. But having said that, I think I'm looking at this market more as an opportunity to buy good stocks rather than really sell anything.
Okay, we'll focus on the key sector, and definitely we are watching out for very closely, and that's the oil and gas sector. At this point in time, we are hearing from various companies their current stance as to what is the supply and the production situation there. At this point in time, there's breaking coming in on your screens, viewers. This is with respect to GAIL now, Gas Authority of India Limited, that is now mulling cut in gas supply to customers. Now, GAIL has actually said they are assessing the need after the LNG supply has been cut. Petronet LNG has also issued force majeure, and the crisis is coming in after the Qatar Energy has stopped the supply there. Remember, Qatar supply is almost to the tune of 40% of India's LNG needs, and therefore now even GAIL is looking at cutting the supply there for customers, and this is with respect to the gas that we consume at this point in time. Let's try and understand. The stock is still up by about mildly in trade at this point in time, but let's actually try and understand what would this mean. So Sharmila, coming to you, the oil and gas scenario is the one that everybody is watching out for very closely. We've seen how crude oil prices are back at about $85 a barrel at this point in time. What that does to the domestic gas producers, the oil producers, and the marketers as well is something that we're watching out for. GAIL stock at this point in time is at the day's high. They're looking at cutting the supply. Petronet LNG has already announced it with the kind of Qatar information that we got this morning. How are you looking at what should be the strategy here?
So, for reasons other than what we are talking about, I've never really had a very positive view on oil and gas as a space, simply because, it's so sensitive to what is happening within the country in terms of inflation, etc., that you never really allow prices to operate by themselves. Though on paper we are supposed to be sort of pricing them to, those lifts have been, those curves that were there are supposed to have been lifted, but you always have some levy, some tax coming in when prices correct, so we don't get the advantage of truly low prices. And when prices go up, hopefully we will see some kind of protection coming in as well. But that said, this is definitely one of the reasons why there is so much concern over the situation that is happening, because the area is our main supplier for oil, LNG, etc. So while you either find somebody else to pivot and find some other supplier, things are going to look tough. And I think we have already seen very big correction on the oil and gas space. And that is precisely, I think, going to be a very key area to watch closely, because what it does to crude prices, what it implies for our inflation, and more specifically for the stock prices.
Absolutely. We'll also focus on the oil space as well. Viewers, this is amid the ongoing tensions in the Middle East. There are fresh developments around Russian crude oil and the shipments coming in from Russia. As well as for India's oil imports, this is going to be important. For more on this, we are actually looking at more Urals cargoes that are turning towards India. That's the news that we also highlighted for you as far as our headline is concerned. I also have Aishwarya Patil, who's been tracking this story very closely to help us understand what to make of these cargoes turning towards India. At this point in time, Aishwarya, what is it that we are looking forward to? What's the kind of supply that we are looking at entering India at this point in time? We're already seeing names like Reliance Industries up and about in trade, about 4% higher. Does that have to do with, finally we are going to be really looking at purchasing some of this oil that has turned our way?
Right. So far, some of these tracking agencies are saying that two of the tankers with over 1.4 million barrels of Urals combined are expected at some of these Indian ports this week. Kepler and Vortexa data shows that so far. And in fact, three sanctioned Russian tankers out of the two may have been devoted mid-voyage to India is what some of these agencies are saying. Now, some of these vessels that include in these three include the Ondune and the Matari that may be carrying over 700,000 barrels each. But of course, India is only expecting about 1.4 million barrels that is supposed to be docked, and then later we'll see how that is contributed further for our refiners as well. India is likely now prioritizing amid all of this chaos and the West Asia conflict, their energy security over US diplomatic pressure of not really buying more Russian oil or reducing that over time is what all of this hints at. And Indian refiners possibly are also fearing severe supply chain shortages. Not out and about spoken of this so far, but maybe we have 50 days of reserves. But if this continues further and there is no relief, we could see some conflict and some supply chain restrictions, shortages because of the Hormuz Strait closure that could create more urgent Middle East supply risks. So far, this is the case. It could be good news for India if we have crude diverted, Russian crude diverted to India because it's the need of the hour and oil keeps the machine running going forward as well. That's the update so far.
Absolutely, Aishwarya. We'll go to Sharmila now and try and understand this. Sharmila, so much has happened around Russian oil over the last couple of months. There was so much pressure from the US to completely cut down of Russian oil imports to zero. In fact, the kind of negotiation that we were seeing happen between both the countries, India and the US, on the bilateral trade deal, many a times, was hinging on this key factor that till the time we do not completely stall purchasing Russian oil, things will not process further. Of course, in, his own statements, US President Donald Trump has time and again mentioned that yes, India has now agreed to buy more from Venezuela, more from the US also indirectly. Now that the situation is completely changed with the geopolitics at hand, and we have more tankers that are turning towards India, this could well be a great news for us because as it is, we are trying to furnish more of our supply chain sorting at this point in time when the world is in disruption. What would this mean?
Absolutely, and it is kind of ironic that we are sort of back to where we started because this was at the crux of the entire debate that should we allow anyone to dictate to us where we should be buying oil from. And here we are in a situation where we have to look at Russia as a supplier simply because the entire supply chain that we were supposed to be dependent on has been impacted. So it really leaves us with little choice. I think the only possibly sort of good thing from our perspective that we can think of is the fact that even as we were in the middle of those having that bilateral trade put down in ink, we had the Supreme Court state in the US that those tariffs were illegal. So I don't know how far we are going to proceed even with that. So I think in that scenario, then I think it's if we were to buy in such a situation from any country of our choice, I don't see how it can really matter to anyone. So I think it's good news, and which is probably one of the sort of probably the relief that we are seeing getting played out in the market. But I think, as I said, sometimes it is that the more things change, the more they remain the same.
Yeah, absolutely. We'll have to keep an eye out on that as well. Stay with us, Sharmila. We also have an important information to share with our viewers with the respect of the ongoing crisis, Israel-Iran. This is from the IMF, which has now warned that the escalating conflict involving Iran could now trigger fresh shocks for the global economy. This is the International Monetary Fund. Speaking in Bangkok, the IMF Managing Director, Kristalina Georgieva, cautioned that prolonged tensions in the Gulf may actually push up energy prices. It could unsettle the markets and also test global economic resilience. Listen in to what she had to say.
Conflict, if proven to be more prolonged, has obvious potential to affect global energy prices, market sentiments, growth and inflation, and it would place new demands on the shoulders of policymakers everywhere. For most of Asia, what is at stake is energy security. And through that confidence, we have seen stock markets jumping on the roller coaster over the last couple of days. So the sooner we see end of calamity, the better for the whole world. But today, let me discuss not this latest shock, but recognize one thing that it indicates. We are in a world of more frequent, more unexpected shocks, and we have been warning our membership for quite some time that uncertainty is now the new normal. We have not entered some neat global transition from state A to state B. We are potentially in a prolonged period of flux. In this new world, policymakers and private sector players alike need to have not only robust strategies and financial strength, but importantly, agility. New shocks in different shapes and sizes will keep coming. Most of the time, we cannot predict what exactly they would be. But all of the time, we can strive to be ready for them.
All right, let's quickly look at how the markets are trading at this point in time. We're just about 8 minutes away from the day's close, 24,714 right now. We're still up by about 234 odd points on the Nifty at this point in time. But look at the top gainers in front of you, and you'll be able to find out the key movement, that you're looking at in some stocks like Adani Ports, it's up by 4%, Hindalco, that's up by 4%, L&T, that's up by 3%. So remember, it's the ports, logistics, it's the metal story that's, of course, globally bound. Energy names like Coal India, NTPC, you have defense names like BEL. So all these names are some or the other way getting impacted or are reflecting the kind of impact of the Israel-Iran war that we are seeing at this point in time. That's where the action is completely shifting. The commodities, the metals, for instance, the oil and gas related stocks. Look at Reliance Industries there. Look at the infra related stocks, of course, at this point in time too. All of these names are actually the ones that are moving in trade at this point in time, about 1.5% higher for the oil and gas index, and Reliance Industries up by about 3% odd. Apart from this, there are many other sectors that are supporting. Of course, we have the auto space that's also driving. Remember, we've seen a good February, auto retail sales, and that's what really leading to some kind of a momentum on that one as well, 1.8% higher. Let me go across to Sharmila to try and understand, as far as the auto space is concerned, what is it that she's watching here. Encouraging numbers, for the February names that we're getting. Most of the companies have also reported better than expected sales, and now we have, probably one of the best months in the recent times that we've seen in terms of Feb, and the expectation is that the demand scenario could continue to be on the positive side. Auto space, is that giving you any kind of comfort at this point?
Absolutely. And I think ever since we've seen that big GST cut, that has been one sector that is sort of back on the map. And, if the numbers are anything to go by, we are definitely off to a strong start in the new financial year. And I think this will only build from here, and probably it might be prudent also now to shift attention to some of the auto ancillary names, because, if you see more sales on the autos, then you will definitely see more traction even in the auto ancillaries.
All right, let's also move forward and try and give you a perspective from the markets again. More voices that have joined through the course of the day. Sharmila, stay with us. We've seen how the markets have been extremely volatile this week, and now experts do say that in case you've been investing in the stock markets or equities via your SIPs monthly, they should not be stopped during market corrections. In fact, these dips often create long-term opportunities for buying, but there's also another concern as far as the earnings growth in the mid-caps and the small caps is seen. As they have slowed, and even in the large caps, they have been under pressure for some time. So how should mutual fund investors navigate this phase is something that we asked Dhirendra Kumar, the CEO of Value Research, on the show today, on the right strategy that you should adopt when it is an uncertain scenario like a war. So let's take a look at what did he say, an excerpt for all of you here.
Investors are overreacting, and that overreaction itself is a risk, not the market fall. The market fall is normal. For last, Nifty fell 15% from September 2024 peak. That sounds scary until you realize that the market was up 80% in the preceding 4 years. The 15% correction after that kind of rally is not a crisis. It's basic arithmetic. SIP inflows are still above 30,000 crore per month. But the worrying signal is that SIP cancellations are outpacing new SIP registration in certain months. The people stopping SIPs are overwhelmingly, relatively new investors who have never seen a proper correction, big decline in the market. And this behavior gap, investors can, the investors simply earn less. In fact, if they invest because they buy after rallies and say, you buy high and sell low, that is not that isn't a new insight. In fact, our research keeps, reminding us that shows that, the gap is often 4-5% between what the fund generates and what investors earn. So market gave you a 15% discount, and if the response is that, cancel the shopping trip, that is the problem that, it was never the market. It was always the investor. I think they have to really conducting yourself behaviorally through these times is important for you to be aware of. One important thing to note is that, companies have done well over the last 4 or 5 years. Earnings are cyclical. Companies, if you look at manufacturing companies, commodity companies, they go through investment cycle. It takes time. It takes time for it to fructify.
All right, so in case you are a mutual fund investor, do not stop your SIPs. In fact, these tips could offer you long-term opportunities. Do not overreact and panic at this point in time. And in fact, continue to have your long-term strategies in place. That's what Dhirendra Kumar had to say. 1% higher for the markets. But let me quickly come to Sharmila once. Sharmila, we've been seeing defense stocks also in the thick of action. We've seen what has happened with Mazagon Dock, a 99,000 crore rupees order there. Do you think in the times of wars, one should double down their bets on defense stories?
The story was already good in the sense, the kind of order book that, for instance, Mazagon Dock had was extremely good. There were two problems with this. One is that the market had outpriced the stock so much that there had been so much euphoria around this entire space that the valuations were just out of sync with what was happening. Because, I think what you also forget is that these orders tend to be little long gestation, and for it to show in the numbers is going to take time. So, those were the problems that the stock was dealing with. But the second issue is where we are now, that you are, and as we were just listening to the IMF chief also say that uncertainty is the new certainty. Yeah. So if you are in a time of where the world is going to be in a constant state of flux, and I also think that perhaps the way news travels, etc., has changed so much over these last so many years that just having access to news and how you react to it is going to take some time to sort of settle down and change. And we are in that state of flux at this point in time, which is why this sector will always sort of remain relevant. And the relevance you will feel when some other country goes to war, even if you are not at war, you immediately think that yes, this should be a sector that the country should be looking at, bolstering its own defense, and then you hear of order and the stocks start running up again. So the only the thing that you should watch out for is the fact that don't get carried away in a euphoria like you did last time.
Don't get carried away.
Wherever the order books are good, definitely look to invest.
All right, viewers, markets have shut shop 1% higher for the Nifty and the Sensex here. You can see the Nifty at 24,737, 256 points higher in trade, 1% higher. The Nifty Bank slightly lower, but still about 0.4% up in trade. Among the gainers are L&T. You can see about a 4% surge there. Within the big ones, it's Reliance Industries that supported the move on the upside. From the defense pack, it's BEL. From the metals pack, you've seen Hindalco up and about. Adani Group stocks like Adani Ports have definitely supported. Power majors, energy majors, NTPC, Coal India among the gainers. But let's see the top laggards there as far as the markets are concerned, where the pressure has still been seen, because on the NSE, still about 955 stocks closed in the red in today's trading session. It's ICICI Bank that's declined. It's SBI that's declined. So the banking space, Tech Mahindra from the IT space has declined. TCS about 0.5% lower as well. These are the names from the IT stocks that have definitely not contributed on the positive side at this point in time. You can see some pressure that continues to be as far as the Nifty stocks are concerned, and banking, IT names in front of you, those are the heavyweights that have declined in trade. But let's come back and try and take some questions of yours now, as we always take with Sharmila. A lot of you have written to us, so we'll take some questions. Very critical time in the market, and therefore important to address our viewers' queries. Sarthak from Delhi, Sharmila has asked you, is the worst over for the IT sector? Should I now consider buying IT sector for the long term, or still avoid the sector for now? So after some days of positive momentum, yet again the stock sector has slipped in trade, and therefore investors are unable to decide what is the right way to approach the IT stocks. What are you suggesting them?
Well, I think you can buy selectively, but just be careful about which stock you're picking and the reasons for your buying the stock. Because the AI threat is real, I think that is what we have understood, and there will be shocks. Because, if you hear of anybody who's sort of a disruptor who's come in, the way we had the whole Anthropic situation play out, then, you will have problems. But having said that, I think if you are not expecting very great runaway returns in the immediate sort of future, and you're a patient, you're playing the long game, then I think, yes, you can selectively buy into the IT space.
Okay. Next, we have Pranav from Mumbai asking you, are oil-sensitive stocks like paints and even tire companies, are they good buying opportunities at the current levels?
I would say yes to both, for different reasons. I think that a tire, because I think we've seen very good auto numbers, and each of the tire companies which are listed, they sort of cater to two-wheelers, trucks, passenger vehicles. So you can choose on the basis of what you think is going to do well among the auto sector. But yes, I think tire stocks are good. Even paints, I think the where we use paints, that is what I would focus on. And there I do see, as if you're buying it as a proxy for real estate, for instance, I think paints is a good place to be in. So yes, I think you can buy both the sectors if you think that the price is right.
Okay. We also have Preeti from Baruch asking you, she says, I'm heavily invested in defense and shipbuilding stocks. What should I do? Should I accumulate more at the current levels or wait for correction? So if you're already heavily invested, like you already were pointing out, one should not get carried away. What's the right way to understand how much is too much?
Yes, so I think wait for corrections therefore, because you are already heavily invested, and I hope you bought it at a good price. So there is no reason to sell as because of whatever we've been discussing. But to add further, at a point where you're already invested in a sector, it's a great sector to be invested in. But to add further, I would really wait for very deep corrections to enter. And again, be careful, because like for instance, the whole situation that is playing out with HCL could have for that I would wait for at least another quarter before I started to think of buying HCL again. But yes, shipbuilding you could possibly look at. The stocks have also corrected. So be selective, and I think it's great that you are already heavily invested.
All right. Thanks a lot then, Sharmila, for being with us on the program. Of course, we'll be getting you back very soon on another edition as well. But thanks for addressing all those queries also for all our viewers. Time to wrap up this edition right here, viewers, with the markets ending up positive. Let's hope that this momentum continues. Stay tuned with us as we will continue to get you news coverage on the other side. And of course, for all the market opening action, don't miss tuning in at 9:05 a.m. tomorrow morning.
Presented by National Stock Exchange.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight. Well said! Well said! Well said! SEBI and NSE advise, consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
In the recent past, Canada's had a fraught relationship with India. You're looking to change the terms of it. Tell us a bit about Mr. Modi. He's another one of these big figures that is dominating